The question is that the bill be now read a second time. Mr. Saktiandi, Supaat.
Mr. Speaker, sir, the payment landscape has been evolving in recent years. With more services going cashless, we have seen an increase in the number of payment services and activities. To maintain our reputation as a global financial hub and to facilitate smooth transactions, we have to keep up with these changes. Meanwhile, these changes also bring along with them new risks, so we must stay vigilant and guard against these risks. By expanding the scope of regulated activities beyond existing facilities and services under the new Payment Services Bill, merchants and consumers can be assured of better protection from MAS across a wider range of payment activities. This will in turn lead to greater confidence and more widespread use of e-payment services. Overall, I think not only will we expect a more secure environment for all to conduct transactions, we can also look forward to increased innovation in payment services. This is a bill which I foresee will be followed up by more amendments in the near future as the payment services landscape continues to evolve and grow. Although it is important to adopt international standards and guidelines, it will be unwise to adopt a reactive stand and wait for these guidelines to be finalized. One feedback is that the banks have shut their doors to the virtual currency industry. Many, including digital exchanges, have had their bank accounts closed. New applications were rejected according to the Digital Exchange Association Pro-Tem committee members, whom I had the opportunity of having a focus group discussion with. I also note that late last year, MAS expressed readiness in helping cryptocurrency firms to set up local bank accounts. Mr. Minister, sir, what is the progress? How many firms have asked for help, and what is MAS doing to help them? Next, on the digital banking license, I understand that the HKMA, Hong Kong Monetary Authority, has a much more liberal approach, and they were considering giving approval to allow some cryptocurrency firms to conduct banking activity, including taking deposits and lending. Perhaps the Minister could clarify if Singapore is looking into issuance of digital banking licenses to such firms. If we are to position ourselves as a fintech hub, doing so would help to improve financial inclusion. Another issue is whether there could be more transparency by requiring payment providers to disclose the fees charged. What benefit the payment providers benefit from on-selling of any third-party products, and whether these providers are related to parties in a transaction. Next is the regulation of crypto custodians, whether MAS is considering this so that the man in the street is protected. These are the businesses which hold the monies of their customers. Should there be guidelines like what percentage of customer assets should be kept in hot or cold wallets? These days, many of us use e-services that comes with its own e-wallet, where consumers can deposit money in advance so it is ready to go. But while convenient, problems like system errors and hacking incidents mean that consumers should be wary of incurring possible losses as a result. If the e-payment company goes out of business, this money is also not protected. Mr. Speaker, sir, in recent times, we saw how Mobike pulled out abruptly from the local bike sharing market, leaving users in the lurch. The Minister mentioned in his speech that major payment institutions are required to safeguard their customers' monies through an undertaking or guarantee by any bank in Singapore, or prescribed financial institution to be fully liable to the customer for such monies, or have a deposit in a trust account. However, to avoid stifling innovation and advent of new payment services, the smaller payment service providers are not subjected to the same requirements. Instead, they would be required to inform their customers that their monies are not subject to safeguarding requirements. So I appreciate the Minister's intentions to encourage smaller experimental companies to set and establish businesses here. Certainly, being less rigid towards the newer players has its benefits, and it will help the e-payment industry grow. Nevertheless, it will be necessary to establish a set of mandatory policies on how such advisory should be administered. Certainly, it would be inappropriate to put advisory in small print in the terms and conditions, which many people already do not read or find difficult to comprehend. The advisory must be published somewhere easily visible, and it should be accompanied by further explanations on the risks involved. Furthermore, I think these smaller payment service providers should still be required to set aside a deposit in lesser amount than that of the major payment service providers. Sometimes when a company has to go or undergo insolvency, it leaves behind some issues that takes up additional resources to resolve. For example, LT had to impound bikes and follow up with Mobike to ensure their bikes are removed. The monies from the fund can be used to fund such operations. Moreover, I believe it will help to hold these companies to greater accountability. Experiential and risk-taking behavior should be encouraged, but when large amounts or large sums of money from the public are involved, one cannot afford to be too free with it. Despite the proliferation of online services, it would still be wise to limit the use of e-money to the smaller day-to-day transactions. So I note that the prescribed cap on personal stored value balances are kept at $5,000 and $30,000 respectively for stock and flow caps respectively. So several big players have earlier expressed disagreement with the cap amounts. So Alipay, Wirecard and PayPal have said that the caps will slow down the growth of e-payments. And this is understandable, as these are reputable companies often dealing with high-value goods and services, as well as the remittance of large amounts of money and purchase of investment products. TransferWise and Revolut outright raised objections, saying that their business models would be affected. The Minister has said in his speech that these caps will not be applicable to merchant payment accounts that cater to business users. While I think that this should put to rest some of the concerns expressed by the payment service providers, there are personal accounts that frequently deal with larger figures. Moreover, some companies already have safeguards in place for dealing with higher amounts. TransferWise, for example, requires the provision of further document for sending amounts of more than $10,000 and above, in line with international wire regulations. So I would like to ask the Minister how the caps were arrived at. I think while we want to manage the pace of deposit outflows and safeguard financial stability and limit potential losses, we also don't want to stifle businesses. In the near future, I believe we can only expect more businesses to introduce their own apps and payment services. This means transactions will go up in value, and these caps, while adequate now, may become too prohibitive in the future. So are there plans to make exceptions for certain e-payment platforms or revise the caps on a regular frequency to reflect the growing extent of e-money usage for major transactions in the near future? Having a number of different payment platforms can lead to increased inconvenience and frustration. No one wants their smartphone to be filled with e-wallets and payment apps, which no doubt takes up precious storage space, as we all probably know. A multitude of apps to choose from also means more confusion over payment, especially for the older users. So the decision to mandate participation of a common payment platform and common standard is an important move. It allows for payment systems to be interoperable, as what Minister has mentioned just now, and makes e-payments more user-friendly. I have a question. What is the Ministry's forecast on our progress with regards to this aspect? How soon can we expect to move to this common platform? Can the affected merchants expect any assistance from the Ministry, or MAS for that matter? Mr. Speaker, I'm pleased to also note that certain cryptocurrency activities will now be regulated. The regulatory focus will be on money laundering, terrorist financing, MLTF, as the Minister has mentioned, but such regulations will give cryptocurrencies players more clarity and confidence. The feedback from the ground is that regulations are welcomed by local players and gives more confidence to the market. But will these regulations also serve as a positive signal to the overseas fintech industry in terms of our openness to see more of such activities on our shores? As the current regulations do not cover user protection for public use of virtual currency, what are the plans, Minister, for public consultation to formulate relevant policies? In the recent G20 meeting last year, country leaders have called for international cryptocurrency taxation. This is testament to how fast the industry is moving globally and a sign that we need to step up on further regulations in terms of personal transactions. So I note that Singapore MAS has been fully supportive of the G20 and the Financial Action Task Force, FATF, but I hope as we make new rules and impositions on our financial institutions and others, we do not impose too much burden on them. Jobs are among the main benefits that will come from the diversification of the financial sector and the development of the fintech sector. In enhancing our licensing framework, we must ensure that it does not inhibit overseas businesses. To stay accessible to overseas markets, it would also be prudent to keep up with the international standards, so we maintain our reputation as a safe yet convenient place to do business. Mr. Minister, how unique is the licensing framework to Singapore in this regard, and how different are the regulatory structures from that of other countries? I think my last point is with regards to exclusions and loyalty points. I note with concern some exclusions from licensing under the PSB, namely limited purpose e-money, incidental payment services by licensed entities, and loyalty programs, and limited purpose virtual currency. May I ask why these are excluded? And some of these things are practically being traded like cash on online forums and selling platforms for a profit. So unlike regular goods and services, these items are partial or full substitutes for currency payments on specific platforms. One potential abuse problem I see with regards to virtual currency is that underage users would purchase in-game assets through other platforms because they do not have credit cards. Are there plans to license these currency or virtual currencies under the PSB in future, Minister? In conclusion, I hope as we become more tech-savvy, we would not overlook the less digitized people in our community and also senior citizens and those less tech-savvy people who would otherwise be alienated in the process. Sir, I support the bill. Thank you.